And gold and silver have glittered in the market over the past year, each surging by 30%, driven by global uncertainties, including the recent US elections. Gold, a traditional safe haven asset, initially soared but saw a correction after Donald Trump's victory in the United States. Analysts now expect the gold prices to remain range-bound in 2025 as markets stabilize further. Silver, on the other hand, continues to shine with stronger momentum. Its industrial applications spanning across electronics, solar panels, healthcare as well as electric vehicles are driving sustained demand for silver and have done so in the year gone by. Moreover, the central bank monetary policies remain crucial in shaping these market dynamics. While imports of gold have also been at an all-time high in the month of December, gold and silver have glittered through the year, surging past 30%, driven by, of course, a lot of global uncertainty, consumption within India. What's your outlook on gold and silver?
So as a brokerage house, when we talk about portfolio allocation, we also mention that a small portion of your investment has to be in gold related asset class. Now, whether it is in form of pure gold or sovereign bonds, of course, sovereign bonds is a little bit of question mark after what happened. And of course, you have the third alternative in terms of gold ETFs. So gold, while it will perform on its demand and sustainability, silver is something that will also be in equal focus because silver also has a lot of industrial use. So we remain positive on gold as such, and of course, the reports from the international agencies suggest that we are likely to see a steady uptick as far as gold is concerned. A lot depends upon global geopolitical situation as well, because whenever we have an unfortunate global political situation, there is always a flight to safety to gold and the gold prices go up. But gold has been performing over the last 5 to 10 years. The only thing is I would want to advise your viewers, don't compare returns on gold with your returns on equity. Gold will give you returns over a longer period of time, maybe 2 years, 3 years, 5 years. But whenever it gives you return, it tends to multiply by 2. So as far as portfolio allocation is concerned, I think a small part of your allocation should be in gold related asset class as well.
Right. Since you talked about equity, given the volatility that we've seen in the past couple of weeks, there have been conversations that perhaps gold is a safer option. At this point, do you suggest rearranging the portfolio to weigh in more for gold because of their sustained returns?
It totally depends upon an individual, his or her age, and the kind of risk appetite and time horizon. So, over leveraging to one particular asset class is always not advisable. It totally depends. And like I said, gold doesn't give you return like how equity does. Gold gives you return over a longish kind of a time horizon. So instead of staying inclined more towards gold, I think you should do a balancing act. So for example, if you ask me, this is just a thumb rule that I can give you. It is not a recommendation. So if you have, say, 100 rupees to invest, put 60 rupees in equity-related asset classes, either direct or mutual fund or SIPs. Put 15% into gold or maybe more in case if you have a little bit of more risk appetite. And there is nothing called safer haven. Risk is there anywhere, any asset class. And then whatever balance remains of about 25 or 30 odd percent, you can possibly put it in your PPFs and your bank FDs or maybe something else. So that's the kind of general allocation that I can possibly recommend.